maybe let's just jump into it. A warm welcome. My name is Ulrike Straker. I am the Austrian Trade Commissioner in Australia and also for the Pacific region, based in Sydney. And I'm very proud that we are teaming up today with Einen Advisory in presenting a webinar to you on how European companies can finance themselves through the Australian capital market. So Einen Advisory is a finance consultancy, corporate finance consultancy based in Australia and Austria for European companies who would like to raise capital in Australia. Together, also today with the German Chamber of Industry and Commerce. And I'm thrilled to welcome our speakers, Gabriela Depisch-Holicky, Partner Einen Advisory, Anuj Goyal, Head of Technology Sector Coverage and Senior Managing Director at Macquarie Capital, Axel Kühner, Board Member of the Austrian Association of Industries and Vice President of the German Chamber of Commerce in Austria, and James Posnet, General Manager Listings at the Australian Securities Exchange. So I'm thrilled we have a fantastic panel of speakers. Before we get into the topic, some housekeeping. So I already mentioned you can ask questions in the chat. We would welcome you to do that, and we'll come back to answer your questions after the presentations. This webinar is being recorded, so in a couple of days' time, we'll be able to send you a link and you can review the webinar. Let me give you a brief overview of Austrian-Australian economic relations and investment. Austria is exporting annually around 1.2 billion euro annually to Australia and has a big surplus in trade with Australia. It has about 4 billion euro investment in Australia, which comes from around 140 companies, Austrian companies, and their subsidiaries in Australia. So the investment here is made by those companies who are exporting, and these exports go into infrastructure in Australia, whether it's into railroad, road, tunnel, airports, communication equipment, and the like. And so the Austrian investment in Australia is really there to service those exports and to secure those exports. On the other side, Australia is investing in Austria with a stock of 2 billion euro into infrastructure like airport, like energy utility, that was divested though, like exploration, gas exploration or lithium. And that is a different kind of investment. It's an investment where capital is put there in order to increase it. So today we would like to look at how Austrian and German companies can tap into Australian capital. And also from the other side, what is interesting for an Australian investor? What kind of investments are interesting for an Australian investor in our countries, in Austria, in Germany? With that, I would like to hand over to my colleague from the German-Australian Chamber of Industry and Commerce, Sylvia Nemeth. Sylvia.
Hello, everybody. I'm Sylvia, and I'm the events manager here at the German-Australian Chamber. And I want to acknowledge the gathered people of the Euro nation, firstly, and pay my respects to the elders, past, present, and emerging. And yeah, a very warm welcome from the German Chamber as well. And yeah, it's great partnering with the Austrian Chamber and Einen Advisory on this topic and event. And I don't think our members, our German chamber members, actually covered this topic in any of the events. So yeah, I'm quite excited for you all. And I think we should just dive into it and hand over to Gabriella.
Yeah, thanks very much, Ulrike and Silvia, for the introduction and also for hosting this event, and to your teams. It's quite a lot of work. It's interesting that you say, Silvia, it's the first event that the German or AHK is doing on this topic. When you are in Australia, as we are, it's such an obvious topic, but it's totally unknown in Germany, Austria. I see some participants from Switzerland here as well. So that's why we are here. We, as Point Ein, we focus on the Export-Weltmeister. Many of you are attending are just that. And the hidden champions in the DACH region. We want to open the Australian capital market up for you to raise capital here, to de-risk, to have an additional way of funding yourselves, a bank, apart from the traditional, what's called house bank in Germany and Austria. Usually when we hear about Australia in the news in Europe, it's about sharks and deadly spiders, and maybe on the nicer side, it's about kangaroos and koalas. Today, we would like to talk about the Australian financial gorilla, which is quite another beast. And I'd like to give you a brief background on why Australia, as a relatively small country, but an important world economy, has such an active capital market. I'll share my screen briefly. Can you see that? Can you see my screen? I guess yes. So the Australian financial gorilla is mainly driven by the superannuation system. That's the Australian pension fund system, and which was introduced in the early 90s, 91. And today, Australia is the fourth largest holder of pension funds assets globally, which is quite remarkable for a country of 26 million. And its pension assets are the fastest growing. It's not only the pension assets that drive the capital market, it's also how the superannuation system allocates these assets. So within the 7 biggest pension markets in the world, which include US, UK, Switzerland, they don't include Austria or Germany, Australia has the highest allocation to equities with 51%. And the lowest allocation to bonds with 15%. So this really drives the equity capital market, because there is a lot of equity that is invested at home, a lot of it via the ISX. The private investment sector is growing, and a lot of equity that is invested directly overseas, including in some German and Austrian deals that we will touch on later. On the retail side, 51% of adults own shares. So traditionally, the retail investors are more open to taking risks. They are, more open to investing on the stock market. When you compare that to Germany, it's 17%. In Austria, it's 27%. So that really drives the market. Ulrike has already touched on infrastructure investments. Australians are very important infrastructure investors globally, and Macquarie is the largest infrastructure manager in the world. So we're very lucky to have Anush here today to touch on that as well. These are deals that are not in the infrastructure segment. We've chosen some strategic deals and some equity deals. So this year, Sonic Healthcare, which is an ASX-listed global diagnostics company, has acquired Medical Lab GmbH from Germany for 180 million. In 22, the Australian Camplify, which is like a camper van hiring business, has acquired 100% of German Paul Kemper GmbH in a deal that was valued around 30 million. Again, Camplify was listed or is still listed, and could use its shares as a currency to buy the German business. In Austria last year, Macquarie Asset Management has acquired 43% of Best in Parking AG, which some of you will know under breiten Tiefgaragen for an undisclosed amount. But we know from the industry that breiten was actually planning an IPO. Macquarie paid such a good valuation that they decided to take them in as equity investors. Also last year, Minderoo Foundation, which is the foundation with the largest endowment in Australia. It's a 7.5 billion Australian dollar foundation connected with one of the most active entrepreneurs in mining, Andrew Forrest, and Fortescue Group has invested or has participated in the Series A in Munich-based farm insect and agriculture scale-up. That was actually a deal that was advised by Point. So we clearly see these opportunities. Australian investors clearly see the opportunities, and we are holding this webinar today to kind of create that awareness with you. In comparison to Australian companies, many of you are facing much more restricted access to equity at home. As I said, typically you will rely on the house bank, and Axel Kühner can maybe touch on that a bit later on, which is fine until it's not, So bis die Hausbank die Linien fällig stellt oder bis ein Projekt nicht so gut geht. So this is why de-risking by raising equity can be a good idea. Today's presentation, just to frame it, and I'll hand on to Anush in a moment, is mainly focused on established companies that are already doing business in Australia or in APAC. So you are already relevant to Australian investors, also depending on your size, because you have clients here, you have employees here, and investors can relate to you. You are actually already an Australian business as well. You already have what's called an Australian connection or an Australian nexus. But we are aware that successful companies come in many shapes, and you have to start somewhere. So for the startups among you, hang in there. This might still be relevant for later on. And please reach out after this presentation to us. We're very happy to hear from you and, discuss what can be done or at what stage we can work together. Now, handing over to Anush, which is kind of fun because Anush is good to talk to and good to chat about ideas and businesses and revenue models. As Ulrike said, he's a senior managing director at Macquarie Capital in Sydney. And he's been in various roles with Macquarie since 2005. So I guess you started as a teenager, Anush.
You're kind.
Yeah. And, maybe let's touch on that. Which sectors are actually relevant for Australian investors? What are you as Macquarie interested in? Now, you are the head of technology, so we have been discussing that space. And infrastructure services companies, which there are a lot of attending actually that are, providing services for infrastructure. But what are the sectors that you are in general interested in?
I think from an Australian investment point of view, if you think about the Australian market, we have a lot of financial services and a lot of mining, so low growth or cyclical. So when Australian investors look offshore, they're really looking for strong growth stories with structural tailwinds, access to offshore growth. And so, any business I think that can present a 5-6% or more growth would be interesting. Double-digit growth gets really interesting, and with a strong defensive story that can ride through the cyclical nature of the markets. I think that's the crux. There'll be special sectors that we know a bit more about. The different industries that we understand, but basically Australian investors are happy to do the work and understand different business models, different industries, as long as they can get a growth story.
in terms of, that's also always an important point in terms of valuations and revenue models. I know when we talk about businesses very quickly, you usually ask us, okay, what's the revenue model, right? Which is actually helpful for German and Austrian businesses because you guys are very spot on, And so what do you think is, what revenue models are Australians looking for? Which impact does it have on valuations? What would you say about that?
I think any revenue model can be interesting, but generally speaking, a recurring revenue model will tend to get a better valuation. And so, you can take one end of the spectrum, which is a recurring software business, will probably get a very strong revenue multiple, whereas you have other businesses that are, got very predictable revenues, reliable, consistent revenues, and earnings. I think they will also get strong valuations as well. So I think it's not any different anywhere in the world, which is the more predictable and strong the revenues and cash flows, the higher value it attracts. I think generally speaking, the Australian market does present pretty strong valuations. I think just before this call, I had a quick look at the relative PEs of the indices, and so whether you look at the FTSE or the German DAX, they're trading at 12, 13 times PE. The Australian ASX indices are around 19 to 20 times PE. So it gives you a good sense of, the ASX investors like to pay for good companies.
Well, touch on that.
May I weigh in here with a question? This is Axel Anush. So apart from the capabilities of the business as such, what is the capability that you expect of a management that you want to get into touch? I think this is something from my experience that management sometimes is afraid of. They believe there's a very professional partner that would invest. So what is it in terms of the capabilities of the management that you would expect to team up with a company here in Europe?
Yeah, I think someone who understands the industry, understands their business, has got a clear direction for the growth of the company, and someone that is willing to spend the time in Australia. I mean, that's the key criteria, I think. You need to be prepared to engage with investors on an ongoing basis, not just one time.
In terms of public versus private, obviously Australia historically has a very strong public market, but there is much more private investment happening, which for some German and Austrian companies may be the easier step into it. You can, to get an Australian investor on the register, and maybe then together an IPO can be, something you do further down the line when you need more equity and when you're more familiar with the market. How do you see that private versus listed? What are the criteria for private deals? So what does the private landscape look like, maybe, Anush?
I think there's a deep private landscape. I did a scan of our key investor clients. There's at least 30 fund managers based out of Australia who have global mandates. And in that global mandate, 25 to 30% of their funds would go into Europe. And they're happy to do that. Most of those would be happy to look at private and public. I think in terms of what they're looking for, generally speaking, it's either the ability to believe the company will IPO in the next 2 to 3 years, because they want to have some liquidity, as well as why the ASX, and that could be to do with some Australian nexus, whether it's operationally, people, but it can also be just comparable. So, is there a company in the Australian market that's similar? And you see that we have real estate classifieds companies in Australia, and so you see a lot of Australian investors in Rightmove, for example, out of the UK. Or even Macquarie tried to buy Immobilien Scout24, that was many years ago. But things that we understand, we like to do offshore as well. So I think, for me, it's really the public versus private question just comes to is there a path towards an ASX IPO within a few years? And what's the sort of connection back to Australia, whether it's specific operations here or it's some other relevant benchmark that, or a industry that the market already understands.
Yeah, maybe as an example, would you like to touch on Light and Wonder from the US? Because just as a background, and James will talk about this, this is not a secret in the world, what we're talking about, right? The Israelis are coming to Australia. New Zealand has historically been coming to Australia. The advisors like us, especially in Perth, that are focusing on the Singaporean market, raising in Australia, also a restricted equity market. And the US, of course, are coming to Australia, right? So US company, which actually for their markets are considering to be too small, or where there are clusters of similar companies here. So maybe if we touch on Light and Wonder, would that make sense, Anush? Just that story of that, gaming.
I'm also happy with James to touch on it, because I think you mentioned his name and he hasn't had a chance to talk yet. Do you want to have a go, James? If you want.
Yeah, sure.
Yeah.
Very happy to. So Light and Wonder's a gaming company that it was listed on NASDAQ, or it continues to be listed on NASDAQ. It was listed in May last year on ASX, and it has a direct comparable, Aristocrat, which is a very similar business, and in fact a competing business. Now in May, the company dual listed onto ASX. There was no capital raising, but quite soon after the listing, it re-rated in terms of valuation. A few months later, became a $9 billion. This is from $5 billion US market cap to $9 billion US market cap, and joined the ASX 200 index, which is an S&P index. So we have an S&P index family, which is obviously a global index family. And the ASX 200 is our sort of blue chip index. So it joined our blue chip index and remains there today. So that was an amazing example of what can be achieved from a company that was supposedly listed in the deepest market in the world, in the US, which, there's some truth to that. But it still found added value by dual listing here. And it really also goes to the demand, the level of institutional investor demand for, as Anuj touched on, higher growth assets to be listed on the market here.
Thanks, James. That's great. Now we've touched on the Australian nexus, which obviously I think from a European point of view, it even took me a while to get used to the fact to saying I live in Australia, because when you're in Europe, it seems so far away. Like, Hong Kong or Singapore for some reason doesn't seem so far away. But the Australian nexus, I think it's important to say, and I'd like to hear what you think about that we can always work on that, right? If we think, as Point Anne and us, as we're here together, and others that we work with, that this is a relevant story for Australia, but we don't have the Australian nexus, there's still things we can do. We can look for an acquisition target in a similar industry that suits the business, which will immediately, so maybe Anush or James, whoever, you can touch on that.
Yeah, I think the easiest path usually there is, if it's a good business, then of these 30 plus funds that like European investment ideas, we will get them to invest pre-IPO. And once you have some pre-IPO money from an Aussie investor, that's a nexus. I think that's the easiest path. Of course, you can look to put up a small office in Australia, or even the Asian region would be close enough if you have some global expansion in mind anyway. But I do think, there's lots of different ways to create a nexus. And the capital markets here are so hungry for ideas and opportunities that they're more open-minded than closed-minded.
Thanks for saying that, Anush, because it's really the case, right? The markets are hungry for opportunities, right? For essentially a deal flow. I think that's important to understand when you compare it to let's say Germany, which is obviously a big economy, or Austria, which is a small economy, but it's punching above its weight in terms of a global economy, you just don't have so many people working on this, right? I mean, Perth is home to, I think, 1,000 listed companies. The headquarter, Sydney, Melbourne, that's where the funds actually, that's where the superannuation funds are actually based. So I think it's daily work for us. Axel, do you have any more questions or input from an owner board of view?
I mean, maybe you allow me to just elaborate for like 2 or 3 minutes on things that really sit on the shoulders of Austrian and German-based companies. I think we need to start very early, because I mean, when incorporated in Germany or Austria, when you grow up, you learn you can only spend what you have, and that is something which applies for a private person, but this is also something which accompanies you through life. So what I want to refer to is that companies in Austria and in Germany are used to be financed very conservatively. And I think this is something which is very important to understand and to have at the back of your mind sitting in Australia. And I think so the first is, and Gabriela, you were referring to awareness. And I think that is very important, that you need to be aware that there are limits to this classic being financed by banks. You mentioned the house bank. So this is something which is very typical. So it feels like a big stretch to do something different. And doing something different, and on top of it, doing 2 steps by having financial partners at the other side of the world, I think that's a lot. And I think this is something you need to understand. And so it is very important to take companies by the hand. And so the communication, I think, is a key issue for companies to go to the Australian capital market, but also, Anush, vice versa. So teaming up with companies here. But so I want to address all these Austrian and German companies with just an example that I've experienced. A company that I'm quite close with. It's a 300 million revenues company based in the southern part of Germany, and they were struggling with their business. So financial situation was strained, and there was the house bank, which obliged them to engage with a bunch of consultants. And so this led to an annual fee that this company had to pay just for being counseled for more than 20 million euros. And in the end, this led to a situation where the house bank just was urging them to sell the company because of this very strained financial situation. So what I want to highlight is that having a dependency, that's a chance and a risk at the same time. So in Germany and Austria, we used to, okay, we have a good relationship, so we can pay into this relationship, and at some point in time there's a payoff. But there's a huge risk, and so I can only say it is so important to understand that there is something out there that would ease your business. But there's something that people need to learn, and this is why, Anush, I was referring to the question, what do you expect from a management? Because I think many companies, from my experience, they start too late, just trying to embrace what is needed to team up with professional financial partners. So I was really stunned to learn how flexible and active the Australian capital market is. But I think it's important to highlight, and this would then, Anush, be the next question. So engaging in communication. I mean, it's we all know that today it's become very easy having calls like this. So can you just elaborate on how would communication with those companies look like? You said you need to be there. I mean, that's obvious. But we're talking about headquarters in Germany and Austria. So what do you expect from the headquarters? how would you see them being involved, and how would communication and requirements look like for these companies? Because from my experience, this is something which many companies are afraid of, that they could not meet your expectation in terms of communication, figures that need to be provided. Maybe you can elaborate on that a little bit more.
Yeah, I think I would expect if you would come to Australia twice a year physically and be available for a call every quarter, that would be a pretty normal expectation. So, at least 4 interactions with investors. I think, of course, if you do some major event like a merger or some big milestone, then people would want to be able to communicate with you at that point as well over Zoom. But I think, if you then want to come again for capital raising in the future, you probably could do that either physically or virtually.
Which is amazing, because I think as a German or Austrian-based company, what you have to do with your house bank, that's much more than this, and so that's a very important information, I think, for the audience here, that the amount that needs to be done here is really quite limited. Thank you. That's really amazing to hear.
And I think if you get the right private investors, they tend to do trips to Europe anyway, so they might meet you on one of those trips as well. So.
I think, James, well, maybe just to add to that, even though these companies may be hesitant in raising capital in Australia, we are talking to all those Export-Weltmeister. Ulrike pointed to some of the figures. And so they have been able to build businesses in the US. Most of the ones that we would talk about in Australia would also have some US business, which actually the Australian investors then find very interesting, because it's a market that they look to. So, the Export-Weltmeister and these hidden champions, they have usually managed to build teams, companies, business from nothing abroad. So raising capital abroad is really, in comparison, it is daunting, but it's in comparison not that hard, as Anush just pointed out. I think it's really an educational, and that's what we are working on as Point An. It's really an understanding and a cultural understanding, and also understanding that equity is risk capital. Risk capital is good to have. If you need capital, it's nothing to be ashamed of, and get it while you're in a good position. Don't come when it's already almost too late and then you get into that situation, and get it for growth. Don't rely solely on debt to grow. There are partners out there that can help you grow and that actually want to finance growth, as Anush said. Now it's 9:07. James, I know you've got a presentation prepared. Would you like to briefly go through that, maybe select the most important charts, and then we can come back to a panel discussion? And everyone in the audience, maybe can you write your questions in the chat, and then we can, after James' presentation, we can read some of them out and finish up with a Q&A.
Sounds great. Thanks, Gabby. I'll share my presentation now. And just in terms of housekeeping, well, first of all, good evening and good morning, everyone. The slides here some of them are somewhat detailed, but I've sort of deliberately done that because these will be available after the session to refer to. And we're more than happy to answer questions after the session as well as during. So what I thought I'd do here is actually just frame up what the Australian market looks like, and it is quite unique in the world for several reasons, which I'll go into shortly. Gabby picked up on this a little bit earlier, and I think we probably used a slightly different source, but we're the 5th biggest pension market globally, which is still very substantial, and for a country of our size is quite an achievement. The market is quite active. So we have on average about 120 listings annually, which puts us in the top 10 by volume of new listings per year of any exchange. Now, of course, the last couple of years have been very quiet globally for IPOs, which we'll get into a little bit later on. But I would say that things are looking certainly better now, and we've seen some interesting IPOs this year already. I think 2025 will be a lot better for activity, but there has been some activity coming through. So, but normally on average about 120 listings a year. And the market, we've had a long history of supporting small and mid-size and early stage companies. And this has come from the junior mining days, which still continue today, but the public market investors have been supporting junior mining companies for 150 years. Now that's translated quite neatly to other sectors like healthcare and technology over the years. So it's been a really helpful feature of the market that you can actually come to list earlier, particularly versus, say, the US market. And now there's a robust regulatory environment. And so what does this mean? We have quite a balanced regulatory environment. So it's not as onerous as listing in the US and burdensome and costly as listing in the US, but it's not like a junior market. So you might know the AIM market in London. It's not as light as that, but we feel that the balance is about right. So, for example, you have semi-annual reporting, not quarterly reporting like in the US. Now, there are 2,000 listings altogether on the market, and these go across a diverse sort of sectors. Pretty much every sector you can think of is represented. And of the 2,000, about 230, about 11% are foreign listings. We've got about 60 listings from New Zealand, about 45 from the US. We've got listings from Canada, the UK, even literally one or two from Germany and Austria. And then in terms of the trading on the market, it is actually a liquid market. It trades about $8 billion daily. Gabby pointed this out. I mean, this is really a massive tailwind. So the pension system, otherwise known as superannuation in Australia, is a massive tailwind for the equity market here and will continue for many years to come. So in the next 20 years or so, the pension market is expected to get to $11 trillion under management. And it's currently about $3.9 trillion. In terms of a comparison versus other markets around the world, if you look back at 2023, this is how the markets stacked up. And I added Deutsche Börse here as well, not to be unkind, but just to actually show how much more active the markets are elsewhere. And so ASX sort of ranks, these are among peer exchanges, very highly here. We see that obviously NASDAQ continues to be quite an active market, and so does Hong Kong. But despite the fact that global IPO markets were quiet, it was still interesting to see some activity. I'll leave this slide with you, but I just wanted to point out a couple of things here. So these are recent listings over the last few years, the last 3 years or so. They're both dual listings as well as IPOs. So dual listings, for example, we touched on Light & Wonder earlier. We also have dual listing of Block, the payments giant, and Newmont, the world's biggest gold producer. They're both as a result of acquisitions that were made of Australian companies, but they chose to take a dual listing on ASX. But we also have foreign listings like GQG, which is a Florida-based asset manager that chose to list here. It's a $6 billion market cap, chose to list here and not in the US because of various things, but including the fact that the valuation multiples were more favorable here. And then in terms of IPOs, we've had GYG, which is a fast food restaurant chain, listed here in June. And it's a sort of high growth restaurant business. The revenue grows about 30% year on year. And it's done extremely well, and I'll touch on that in a moment. And then we also have other companies like Ventia, which is an infrastructure services company that might be interesting to this audience. It was also an Apollo private equity portfolio company, and Apollo used that to gain liquidity and is now fully exited from that investment. So Guzman & Gomez has gone extremely well, and I don't really have time to talk to this slide in detail, but ultimately, since the listing in June, the company is at 84%. It raised 300 million on a bit over 300 million on IPO, and was valued at 2.2 billion now around $4 billion market cap. But I wanted to show this because it just shows how the demand is there, and really it's just a matter of time now before we get much more activity back. Now it's not just about
maybe going back to, sorry James to interrupt, can you talk on valuation a bit for
yes,
Guzman & Gomez? It's quite amazing, the valuation, I have to say, like EBITDA multiples.
Yes, I've got a little bit more on valuation later, but yes, in terms of forward price to sales, currently trading at nine times, and so for a restaurant business, and again just to remind you, 30% year-on-year revenue growth, for a restaurant business that is quite significant. It is profitable, but is growing at a good rate. Both in Australia but also overseas, and I think that really goes to the point that quality growth assets are in demand for listing. As simple as that. And as Anuj touched on earlier, that can be in a variety of different sectors. It doesn't necessarily need to just be technology or healthcare. It's really about the growth profile. So an IPO is just one capital raising. Arguably a more important reason to list is the follow-on offerings. So to come back to market time and time again and raise money. Now I can confidently say, having worked in many markets around the world over the years, that Australia and ASX specifically has the best settings for follow-on offerings. You can do a placement, for example, and raise money with shareholders without shareholder approval. So raise money within 48 hours with a low doc offering. And so it's a very streamlined process. It's a very streamlined process to raise money in Australia. That's on the settings side, but also on the demand side, we touched on those tailwinds we get from the pension market, but also the fact that we just got an oversized investment buy side effectively relative to the size of the market itself. So the demand is quite often there. And so we're number one by volume of any exchange, and there's about 130 exchanges that are active. So number one by volume in follow-on offerings. And we rank ahead of London and Hong Kong and so on by value.
And can I maybe hook in here? This is, I think, very important because actually there's a few points here. One point is that while you may not consider an IPO because you haven't seen so many in Europe or in Germany and Austria, it's still a very good way to get passive capital, and it's also good exit options if you already have private equity on board and they want to get out, but you as the entrepreneur, as the private family holding, as the founder, you don't want to get out, right? So it's really a considerable exit option if you already have investors on board that eventually will want to get out. And I think it's very important what you say, James, in terms of secondary offerings. I have seen companies listed in Vienna since the 2000s who've only done one single follow-on raising. Well, there's no point being listed then, right? And I think it's also important here to touch on the regulatory regime. So maybe you can explain that you can list as a CDI, but you can also have an Australian holding. And when we touch base on the Australian holding, I just want to say the Corporate Act makes it so much easier for companies to raise secondary capital than is the case in Germany and Austria, where there is much more protection of the existing shareholders.
Yeah. Shall I move on to index now? and then we can
yeah, that's very important
in question.
Yeah.
So just in terms of indexing, as I mentioned before, we've got S&P indices, and the pitch here is to say, look, if you list on ASX, you can get into an index far earlier than you can in other major markets around the world. And an index is obviously important because it helps support liquidity in investment in the stock. So if I look, for example, at the S&P ASX 200, the entry point is about $1.9 billion market cap. This is US, just for comparison reasons. The S&P 500 entry point on the right-hand side is $18 billion entry point. So you can see that, there's a large gap between joining, and that's, by the way, to the bottom of the S&P 500. There's a large gap between the S&P ASX 200 and the S&P 500 in the US. And so that we see that as a great addressable market for us, and it's part of the reason why some US companies have chosen to list on ASX, among other reasons, including valuation, which I'll come on to next. Just to touch on it, and again, we touched on this before, but it's not just Australian investors that are active on the market here, of course. It's US investors, European investors, and Asian investors as well. And we also have quite active retail investor base, which is important for liquidity. This is a rather detailed slide, but I'd like to show it because it actually just shows something that is not necessarily talked about that much. So if I just draw your eye to the S&P 500, and I'm using here if I talk about the Information Technology Index, the difference is quite stark between the US and Australia, but also within the US. So if you look at the S&P 500 Infotech Index, which is just below the first red box there, it's trading on a sort of price to sales of 8.5 currently. So this is forward sales, 8.5. But if you go up and you look at the small cap and mid cap indices, they're trading at about 1.5. So you can see there's a cliff, and you just fall out of favor and are not noticed outside the S&P 500 to the same degree. Now, this has been a pattern that I've observed at least for the last 15 years. The numbers vary slightly year on year, but this is something that's been consistent over time. Now, if you compare that with our index, the S&P ASX All Technology Index, or our Information Technology Index, the ASX 300, we're trading at a similar level to the S&P 500 Information Technology Index. And I've included here as well in orange, you can see the FTSE and then the stocks Europe. So these are biggest companies in Europe, also trading at quite significant discount to what we see in the ASX market. So this is quite compelling. And again, you can actually see this in other sectors as well, but I wanted to just use this as an example, the tech sector. Now, I'm just conscious of time, so I'll go through very quickly here. Now, in terms of the level of where you might actually think about listing, typically, you might take a number of rounds and then list when you're quite large, like in the US market in particular. And you can sort of read this diagram as the US approach to listing, which is it lists when you're large. Effectively, you can list if you're, for example, in the tech sector, you can list as an alternative to, say, Series C, if you think of it in that context. But just to drill down into some numbers, if you are a high growth business. Now, I always hesitate to sort of anchor people to numbers. And so please take this as very indicative. But if you're a sort of $200 million market cap company, raising, say, $40 to $50 million, and this is for a high growth company, you could think of it as maybe a high growth technology business. And you've got revenue of 40 to 50 million per year, you can actually get quite a good following on the ASX market. And I'm saying this as an entry point. You can actually get traction and genuinely get institutional investment, which is quite interesting. And in terms of what does high growth mean, if you're growing at 15 to 20% top line, that can be compelling enough. and that can be compelling enough to get people interested. And say if you're a software business, so a gross margin of 70% or more, is not a bad place to be. Now, obviously, there's a lot of variation here, and again, this is a very general sort of indicative sort of anchoring in some ways, but I just wanted to sort of show you this to give you a sense of the size of company you need to be to come onto the ASX market. I might just leave it there, Gabby, on the slides, and maybe we go to discussion.
Yeah, maybe we can go back to questions. And I would still also, like to focus on the reminder of the point that Anush mentioned. We're talking a lot about listed here, and that will be quite scary from a European perspective. But there is also a deep private capital pool to start with, so you don't have to go straight to an IPO. But Ulrike, maybe do you have an overview of the questions in the chat? Are there any questions?
Yes. Okay, so we've got Erwin Loretz asking, Mr. Goyle, my question, investments from your side in Austrian companies are also possible from your side if they want to establish new production facilities in the field of worldwide needed renewable energy in Australia?
Yeah, I think, just taking Macquarie's point of view, we're the biggest owner of infrastructure globally, and I think at least top two biggest investor in renewable energy infrastructure globally. And so really any market we'd be happy to look at other than very developing markets, I guess, frontier markets. And yeah, opportunity in Austria or Australia will be totally interesting to us. Yeah.
That leads directly to the next question. We Enso GmbH is a question by Wolfgang Kröpfel. We Enso GmbH Limited are an Austrian-based technology-oriented asset manager. We have a broad pipeline of infrastructure projects, e.g. hydropower, including pumped storage, PV, wind, BESS, P2G, hydrogen. We act in broader Europe and also active in Africa, Sub-Sahara, where we actually developed more than 400 megawatt photovoltaics in Zambia, Zimbabwe, and he lists a couple of countries. Any interest from Australian investors to participate in equity and or co-development? And as a specific project, we in short can offer a 200 megawatt hydropower portfolio in Peru as a platform. Is there any interest in such developments?
Yeah, I think yeah, same point. Australian investors like infrastructure, particularly renewable infrastructure. I'm not confident I know the answer to Africa Sub-Sahara, so I think that would be specific to each country. But I do think Peru would be very interesting, and for example, Macquarie is a large South American renewables infrastructure practice that would look at that pretty quickly.
Mm-hmm. Okay, so here's another question. Very insightful. Could you please outline how Austrian startups could access the equity market? Where to start and what sectors are in demand? Are there any particular programs for that?
Yeah, broad question. It depends on, I think, what you're looking to achieve. If it's just like a passive investment in a typical technology startup, then with no real nexus to Australia, it would be interesting to see, whether you could get the venture capital investors to stretch to Europe for that. But I think if you have some angle into this market where they could feel like they're adding value, then yeah, I think they would take a look. Our venture capital scene is relatively new, about 10 years old, I would say. But we do have, large amounts of money, once again, fueled by the pension pool that we have. So there's a fair amount that goes into venture capital, and they do generally have mandates to invest globally.
Maybe for venture capital, also reach out to us. They actually don't have so many mandates to invest globally. We've screened them quite precisely. In venture capital, there's more on the mining side and energy side, where but a lot of them are also restricted to Australia and New Zealand. But there are some opportunities there. Yeah.
I would say, if I could jump in, if you're thinking, and we haven't touched on it yet, but pre-IPO investment is quite large now in Australia, and typically investors are sort of looking for $5 million revenue Australian as a sort of starting point if you're in the tech sector. Now that might be a bit further where you are currently, but if you are around that sort of $5 million revenue, pre-IPO investment is definitely viable, and that can be cross-border quite easily.
So these are, maybe just to elaborate on this, these are so-called pre-IPO or crossover funds that invest in a company with the view to IPO in the next 24 months or so, correct? Yeah.
Yeah, that's right. Yeah, normally they're sort of investing. They're public market investors traditionally, but they're reaching down into private markets, and yeah, typically up to 24 months is what we normally see. Yeah, ahead of an IPO.
Yeah.
Okay. Thank you, James. Another question. HyCenter is one of Europe's largest hydrogen research centers in Austria. We've been conducting research along the entire hydrogen value chain for 20 years. In 2024, we researched and significantly improved electrolyzers for an Australian company for the first time. We were at the Hydrogen Summit in Brisbane in September, learned that Australia companies and states want to implement huge investment projects in the hydrogen economy as a future market. How can we, as a research center here in Australia, proceed in order to sustainably interlink Austrian research with Australian requirements? How are consortia organized here? What are the requirements? What is funding? What funding is possible?
I guess I'm meeting you in Graz anyway, right, Martin? And then we can discuss this. It's very interesting. HyCenter, we've met at the hydrogen delegation, has actually, I think we can say this here, has actually worked with Fortescue to improve their electrolysis technologies. But I don't think we can give a straight out answer. It's a bit too complex in this forum. Any more questions in the, anyone who would like to be unmuted and ask a question before we wrap up? Or any more questions? Ulrike, maybe one or two more questions from the chat?
There was one, but I think you've answered that. What is the sweet spot with regards to deal size for your investment targets? I think you've given some examples, but if you would like...
I was just saying it's not a Australian investor perspective, just from a Macquarie perspective. I wasn't sure the question, but Macquarie would usually be at least US 25 million minimum check.
Raising, yes. And James, on the ISX, you had that, you didn't present that one slide actually, where you say from which size come and what kind of raise, come and consider this. Because it's much smaller than many scale-ups would think.
Yeah, so as I mentioned, I mean, if you can sort of raise 40 to 50 million and be around a 200 million market cap, that's actually not a bad place to be. Part of the reason for that actually is also that you might have seen the All Ords Index. So the All Ords Index is actually our top 500 stocks out of 2,000. The entry point to that is about 150 million market cap. So you can get a sense of, you're going to get attention from $150 million market cap up. Now that is relatively small, but it's still worth thinking about. And if you can be bigger, all of the better,
Okay, well, there is one more question, and I think it's good at the end. Mr. Goyle, how can we proceed with the next steps with you to set up a renewable energy production facility? This was the same gentleman who was speaking about renewable energy in Australia. How can we proceed to set up a renewable energy production facility in Australia with an investment of around 40 million euros. But maybe representing all of the listeners, how would we proceed with questions that they have towards you?
Sure. I think the good news is we've got Point Anne on the team here. So Point Anne can speak the same language and, definitely think about it from your side. So maybe start with them, and I'm happy to join calls as well as appropriate to discuss. I myself am a technology person, so there'd be hundreds of other people at Macquarie that cover renewables, so we could get the right people involved depending on what it is. So.
And just a related point from my side, what I've seen over the years is it is important to, if you're a cross-border transaction for an IPO, it is so important to have an advisor that can actually talk to both sides and actually talk cross-border, like people like Point Anne Advisory can do, because that just helps navigate the ecosystem here and then connect the two. So that's just anecdotally what I've seen over the years as well.
Thanks very much. I think we can wrap up here. Thank you, really, Ulrike and Silvia from AHK and Advantage Austria. Thank you, Anush and James. It's so much fun to talk to you always. Although, of course, I have to say there's other people to talk to in the market as well. So it's our role to choose for each company who do we talk to in the market. And please don't hesitate to reach out to us, advisory@pointanne.com, or via the AHK, or via Ulrike, or via our website, pointanne.com. It's very easy. And we look forward. I haven't agreed on this with Ulrike and Silvia, but we will review if this was successful, and maybe we'll organize another event like this in 6 to 9 months, and then maybe see you again.
Fantastic. Also from my side, thank you very much for joining us, for your time. To our audience, please write us questions if you want to get in touch. We will facilitate that, and we would be happy to work with you in the future. And so thank you very, very much for giving your time to us this morning.